A couple months ago, Crypto.com announced a new feature called the Updown Options. Now, it's a really cool feature, and I'm not seeing a lot of people talk about it, so I wanted to talk about it. So, in today's video, I just want to go over how this new feature works, how you can use it to help you trade, and just my overall thoughts on it. As always, before we get into it, make sure you guys smash that like button, subscribe if you guys haven't already. I make videos all about crypto, so if you want to stay up to date with the latest crypto trends and the news, make sure you guys subscribe. But without further ado, let's get into this really cool feature. So what is this up-down contract feature and how does it really work? So basically what this up-down contract allows you to do is make trades based on the price movement of a coin without actually owning that coin itself. But wait, why trade up-down contracts when you can just buy the actual coin and trade that? Well, the thing is that up-down contracts actually cost a fraction of the price of the coin, but they also allow you to take advantage of the full coin's price movement. So for example, let's say Bitcoin is $20,000 and it goes up to $20,200, so an increase of $200. If you were to buy just $100 worth of Bitcoin, you'd profit just $1 with that price increase. But if you were to have bought an up-down contract for $100, you would have profited that full $200, the exact increase in its price. And the cool thing is it's not only if the price of Bitcoin goes up, even if the price goes down, you can still profit. Now, each up-down contract is capped with a target price, stop price, and an expiry date. So let's say you believe the price of Bitcoin to go down and you bought a contract. So when either the target or the stop price is reached or the contract expires, that's when the trade or contract is automatically settled and where you'll lock in either your profit or loss for that trade. But you don't have to wait until it hits a stop or target price. You can close your position whenever you want as well. Another thing with the up-down contracts is that you'll always know what your max risk is, because with the target price and stop price levels, you'll know what the max you can gain or lose before you'll make the actual trade. So you'll never lose more than what you actually put in. But yeah, that's pretty much the gist of what this up-down feature is and how it works. But let's take it one step further and see how you can actually set this up and trade with it. So the very first thing you need to do is download the Crypto.com app. I'll put a link to it down below. So if you don't have it, make sure you download it and sign up for it. Or if you do have it, just open up the app. Okay, so when you get in the app, this is the main dashboard area. All you're gonna have to do is scroll down over here until you see the up-down options. Now this is on the main page for me, but if you don't see it here, all you have to do is click this circle button on the bottom middle part and you can see up-down options right over here. Now if this is your first time clicking on it, it'll ask you some questions and some things you're gonna need to accept. Read through everything and make sure everything looks good with you. Once everything looks good and you submit everything, you should be approved to start trading up-down options based on what you answered. Now when you first click the up-down options tab, it'll open you up to a brand new page, and over here you can see your open positions and your order history. Now obviously you don't have anything, so it'll be empty when you first open it up. Now the next thing you're gonna want to do is head over to the bottom and click the trade now button. Now this will pull up the two coins you're able to do this up-down contract trading with. Right now you can only do this with Bitcoin and Ethereum, so choose whichever coin you feel more comfortable with. I'm gonna end up choosing Bitcoin. Okay, so here this is where you get to choose whether you think the price of Bitcoin is going to go up or down based on its current price right here, which is 27,611 cents right now, and this price is always changing because this is based on real time. Okay, so before you choose whether you think the price is going to go up or down, it's crucial you do some research, some technical analysis, look at some news, do whatever it is you can to get some more information on what you think is going to happen and not just solely guess on what you think is going to happen. Have some reason behind why you choose up or down. So for example purposes, I'm going to say I think the price of Bitcoin is going to go up. So all I'm going to do is head over here and click up, and it'll open you up to the next page where you can choose the exact contracts you want to buy and sell. It actually makes it kind of simple because you can actually toggle between up and down over here. So if you change your mind, you can easily just toggle between the two. So over here you can see all the contracts that are available. So right now there's only 4 contracts available for if you think the price is going to go up, and if you think the price is going to go down, there's 4 contracts as well. Now the cool thing is you can see everything you need to know within this single box, and if you click on it you can see the stop and target levels as well and where the price is right now. So it gives you a better visual of how high the price can go or how low it can go as well. But if you look at the first square over here, we can see that the target price is $28,000 and the stop price is $27,500, and currently the price of Bitcoin is $27,604. So since we're believing the price of Bitcoin to go up, we can see the max profit we can get is $394, and we can also see that the max loss we can get is $105. Now remember, we're just looking at the target levels. So as I said before, if we hit $28,000 within the expire day of 2 days and 20 hours, it'll automatically sell and we'll get a $396 profit. But let's say within the 2 days it goes down to 27,500, which is our stop loss, it'll automatically sell and we'll incur a loss of $103.60 right now. Now let's say within the 2 days and 20 hours it doesn't go to 28,000 or 27,500, we just stay within this little area over here, then it'll automatically sell on that second day mark for whatever the price is at that given moment. So if it's under your 27,603, you'll be at a loss. If it's over, you'll be in profit. Now you can also see the cost for each contract on the bottom left. You can see over here it says you pay min. Now this is the minimum price, so over here it says $103.60, but if you click next, we can see that the cost is $119. So it fluctuates, you're just gonna have to click it and see. But once you choose which contract you want, it'll pull up to this page where you can choose the number of contracts you want as well. So if you just keep going up, the price will keep going up as well. So as you can see, we start at 119, then it goes to 238, then 357, 476, and you can, I'm pretty sure you can do as many contracts as you want. It's just based off your available balance in your USD fiat wallet. And it also gives you a better representation. So let's say I bought 4 contracts, it's going to cost me $476 or $488. It's moving too fast, but whatever the you pay is, you can see that that's the max I can lose. So you'll never lose more than what you put in. So let's say it goes to that stop loss, you'll lose your full amount. But on the other side, you can also gain $1,500 if it hits that target price level. Like I said, you can sell whenever you want within the $27,000 to $28,000 level, or before it even hits $27,500. If you're getting a little more scared, you can sell whenever you want. It's not tied down to those two target and stop price levels. Now, I don't have any money in my account right now, but all you're gonna have to do is click review, and then a page will pop up, and once you just hit submit, it'll go through and you can sell whenever you want, or you can see on your main dashboard what the value of that contract will be. Now, one thing I want to mention is that the lowest price contract is always on the top. It gets more expensive as you go down. So as you can see, it's $103.60, $203, $303, and $403. Now, the thing is, the first one costs the lowest, but it also has the highest potential on making money. And if you look closely, you can see that the max profit drops from each. So it goes from $396, $296, $196, and then $96. Now, although your max profit is higher, as you can see from $27,603 to $2,800, you have a big gap. You also have to take into account your stop price is a lot lower compared to the others. So if you go to the other one, look, your stop price is lower. If you go to the third one, your stop price is lower. But if you go over here, you only have about $100 worth of price movement before you get stop price out. So the cost for the top contracts are lower, but the risk is there as well. And if you head over here to the bottom one, as you can see, the risk level is mitigated a lot. Now you have a $600 difference between you hit your stop price, but you only have $100 on top. That's why your max profit is a lot lower than the first one we saw. So just keep that in mind. The top contracts is more risk, but also more reward. And then the bottom ones are less risk and also less reward. So you just have to play and see what works best for you. Pretty simple, right? Okay, so what are my thoughts? Overall, I think the concept is really cool. It reduces the barrier to entry when it comes to trading, because trading is very complex and analytical, and this feature makes it very much doable for a lot of people. It also reduces the capital needed for trading by a lot as well, and allows you to make money regardless of which way the market is moving, which is a huge plus. And because you can profit whichever way the market goes, if you wanted to, you can also use it as a hedge against your crypto portfolio, where maybe you short the price of Bitcoin if you think the price is going to go down, and then take those gains to cover the losses of your holding portfolio. My biggest concern though when it comes to trading with options and all of this stuff is security and privacy. And fortunately, Crypto.com has a highly reputable platform that has millions of users, so luckily I don't have to worry about that. Now, while the platform and features are there, it doesn't necessarily mean this is all risk-free. Anything you do in crypto is risky. You should always do your research before making any trades. The up-down options feature entirely depends on your understanding and knowledge of how the price will move in the coming days. So it's important to know your material and have a solid information about cryptocurrencies in general. Now, if you want some clarity or want to use what I use when I make my trades, I use this service or algorithm called Lux Algo. Now, I've talked about them plenty of times in the past, but they essentially tell you when to buy and sell crypto. All it does is it links to your chart and it it tells you in real time whether the price will go either up or down. So you can also use that to make decisions on whether you think the price will go up or down. I'll put a link to that down below as well. But that was it, guys. This was my review and how-to guide for this new Crypto.com up-down trading options feature. Hopefully this video helped you guys out and answer some of your questions. If you have any other questions, feel free to let me know down in the comment section below. I'll also put some helpful links down below as well. And remember, nothing I said today was financial advice. Everything was based solely on my opinion. Remember, subscribe for more weekly crypto videos. I hope you guys have a great rest of your day, and I'll see you guys in next week's video. Peace.